Why do 90% of traders lose? It's because you guys' charts look like this. It doesn't have a market logic behind it. You don't trade the market. You read it and then you position. The market nobody taught you. You've been taught support and resistance. You've been taught RSI and MACD. You've been taught candlestick patterns. None of that tells you what the market is actually doing. Today, I'm going to show you how the market actually moves. And once you see it, you can't unsee it. This is video 1 of the Mr. Younity mentorship series. Welcome, guys. Let's start with the most fundamental question. What is the market actually doing at any given moment? The answer is simple. It's either in a range, price moving sideways, generating liquidity, and building fuel. An expansion is directional. As you can see, price is moving aggressively towards a target. This is where money is made. And your only job as a trader is to be in expansions and completely ignore everything else. Look at this chart. See all this choppy sideways movement? That's a range. Most retail traders are in there fighting for pips that don't even exist. This is a negative expectancy game. Now watch what happens next. That's an expansion, clean, directional, and high probability. And that's what we trade. Now let's go deeper. There are actually 5 profiles the market moves in, not 2. Let me walk you through all 5. We start with the range, expansion, retracement, reversal, manipulation. It goes from 1 to 5. Profile number 1, range. Price moves sideways within a defined high and low. High frequency noise, low directional conviction. Rule: never trade inside the range ever. Retail traders fight here and lose. Profile number 2, expansion. Price breaks out of the range and moves aggressively in one direction. This is the profile you want to be in. Key: expansion always moves towards a draw on liquidity, a target. It can be a high time frame, old low, or old high. The sequence: range builds fuel, expansion burns it. Always. Profile number 3, retracement. After an expansion, price pulls back, but within the structure of the trend. This is not a reversal. It's a pause before continuation. Rule: avoid trading retracements as expansion. Context is everything. And then profile number 4, reversal. Price reaches a key level and fully changes direction. This is a high value trade when price completes its expansion and reverses. It requires a key level as a confluence to be valid. And at last, profile number 5, manipulation. The most dangerous and most profitable profile. Price makes a false move against the real direction to trap retail traders. This is the turtle soup, the stop run, and the liquidity grab before the real move. Now here's a key insight that changes everything. The sequence matters. When you're in a ranging profile and you see a manipulation below a key level, you should expect an expansion to the upside. So let me say it another time. When you're in a ranging profile and you see a manipulation below a key level, you should expect an expansion to the upside. That's the framework. That's the framework. So now you know the 5 profiles, but knowing them isn't enough. You need rules. There are 3 non-negotiable rules. Rule number 1. Only trade expansions and reversals. Everything else, range, retracement, manipulation, you do not touch. Rule number 2, use key levels to predict which profile comes next. A ranging profile at the key level will always produce a manipulation first, then an expansion. And rule number 3, the manipulation is your best friend. When you see price violate the key level and close back inside, that's a signal. The real move is coming. Write these rules down. Tattoo them in your brain, because 90% of the losing trades come from traders entering in a range or a retracement thinking it's an expansion. So let me give you the full outcome matrix. This is how you predict market behavior with a logical reasoning. What you should avoid and what you should trade. Expansion, but no key level. Avoid. Reversal plus no key level. Avoid. Expansion plus key level, that you can trade. Reversal plus key level, you need to avoid those one as well. Ranging and no key level, avoid that. Retracement and the key level, trade it. Ranging and the key level, trade it. Manipulation profile, trade, because it can lead to an expansion. Write these down. This is the logical framework. You can write this down, I'll wait. So that's the foundation, market profiles. 5 structures, 1 filter. I'm gonna give you guys some homework before the next video. Go to your charts, look at the last 5 days of price action, try to identify each of the 5 profiles. Don't trade them yet, just identify them. Build the eye. I'm Mr. Younity, and this is just the beginning. In the next video, we are going to layer in key levels, the exact price zones where these profiles come to life. Because understanding a profile without a key level is like knowing you need to drive somewhere without a map. Hella love.